All right, good evening and welcome to our Mortgage Coffee Talk. This is our first Mortgage Coffee Talk in 2024. And we have quite a few episodes on YouTube channel. And today we're going to talk about get to know multiple loan options available because people are buying and selling real estate or other areas, and what type of loans are available, what are the options available. And it's just an educational talk where we are able to ask, you ask questions, we can answer your questions. And obviously, any specific question which relates to a client has to be spoken to our team privately, and we set up a time. In the meantime, we're going to do a small presentation, and then we'll have a Q&A session. So I'm going to share my screen. And let's see, here we go. I'm going to put in the sound too. Okay, and beginning. I'm going to minimize the screen. So it's a free interactive webinar because get to know multiple loan options. And as you know, I am a host and also a principal broker of Canada Express Mortgage. So when we're talking about loan requirement before lending, what are the few important things that to remember? One is a applicant must have a credit score and history. And we're going to explain you what this means. And income that you need to put together all the information. And debt to income ratio. This is very important to determine how much you qualify. And collateral is what, in this case, we are using a property if there is a property loan. And also origination fees when you pay to the lender, and also brokerage fee that is charged. So these are loan requirement, and we're going to go in detail each one of them so you understand each one. We're going to define each one. So let's say credit score and history. What is a credit score? A credit score is a three-digit number that rates your creditworthiness. FIFCO scores range from 300 to 900. The higher score, the more likely you get approved for loans and better rates. If you use Equifax or TransUnion, these are the most famous credit bureaus, and you will be able to pull the report. So if you are dealing with a client or a consumer itself, they need to get this report. It costs about $14 to $20. You can download this and you know if somebody is, how many people have inquired about your credit score. It shows you. And also if some information is mixed up with somebody else and you're getting a bad credit score, this is where you will learn that. So it's very, very important to have a credit score history with you. Anytime you default on payment, any loan, all lenders, no matter what loan that is, we're going to show you the type of loans. They will put their report when you seek their credit. So this is very important to remember. So income, very important, because you want somebody to give you money and you have to demonstrate that you have income. As a business owner, it is crucial to have a clear understanding of legal definition of income. In simple terms, income refers to amount of money someone earns from his salary, business, or a profession. Profession services, business you doing retail or commercial, or salary you're a payroll employee or self-employed. All these people, you have an income coming. You're getting a T4, you're getting invoices, the income you report to CRA. It's an essential concept that plays a significant role in various aspects of financial management and taxation. So when you have an income, you must have a verifiable income. So we're going to go detail later on. So I just want you to know, when you're dealing with a consumer, you are talking about income, verification of income. So debt to income ratio is very important and critical when you are arranging financing. A debt to income ratio measures the percentage of a person's monthly income that goes to debt payment. So they want to know whether you are negative or positive and what is the percentage. Lenders use the DTI ratio to determine a borrower's creditworthiness. And some DTI is 43, 44%, some use 40%. It depends on the lender. Is the typical the highest ratio a borrower can have to qualify for a mortgage? If your DTI is higher than this, you can have a challenge. So low DTI ratio indicates sufficient income relative to debt servicing. So this is very, very important when somebody, even buying in real estate, you need to know what their income is. And at least you can see that if their DTI is high, they're not going to qualify for the mortgage. Then you look at the other scenario. We're going to talk about the type of loans available or multiple options. So this DTI is very, very important for you to know. So are you wasting your time working with as a realtor or any consumer? Collateral. So something pledged as a security to repayment of a loan to be forfeited in the event of a default. In this case, we are taking a loan for a property, whether you're refinancing or you are renewing it or you are taking a loan, whether it's a conventional mortgage or is a reverse mortgage or is a B lender. So collateral is your house. Now, if you are buying a buying a car or taking a loan, so your car will be collateral used by the lender who provides you the financing. You go to any retailer, they will take that until you pay this. Whether it's even a lease is also a collateral against your car or vehicle. So origination fees. Always keep in mind, an origin fee is a charge to a borrower by a lender as compensation for processing a loan application. If you are dealing with a lender, sometimes majority of them won't charge a fee. But if you are going through a brokerage and it's not a lender, then the brokerage will also charge you a fee. It depends on how much. But nobody will charge you advance fee. It is paid after the transaction has been completed. If the transaction is over $400,000, then the fee can be charged. And this is very important that you have to understand that your client should know that there will be a fee. So it all depends on the intent of the application, when and where and how you're borrowing the money. So keep in mind there is a cost. Sometimes the lender pays to the brokerage. So in some cases, you don't pay, the borrower will not pay any money. But in B lending or any alternate solution, there will be a fee that you have to pay to the lender and always to the brokerage. So here's the type of loans. I'm going to minimize this. Type of loans. I'm giving you various types. Personal loan, if you need a line of credit or you need a student loans, anything. Auto loans, you're taking about auto loans, student loans, mortgage loan, that's where we are dealing with a mortgage. Credit builder loans, sometimes you have a proposal and you want to consolidate all your debt and pay off the highest mortgage to consolidate them. So you also have a debt consolidation where we have many, many options available. Commercial loan, commercial loans these are for the businesses or for the construction loan or businesses acquiring a business, whatever relates to commercial. Small business loan, there are some programs federally available, but you can also work with the BDC and other institutions that provide funding. We are a brokerage, so we provide services through our lending system, the network we have. So land loans, some people buy land, they bank land, they buy land and they want to borrow money. And it's very challenging. Please turn off the mic, please. Okay. All right, so let me minimize this again. We were going there. Okay. Okay, stop it. Where did it go? Okay. Give me 1 second. I think it went to share. I have to stop sharing. I have to go back again. I think okay. Nice. Sorry about that. All right, so I'm going to put it to minimum here. So these are type of loans available. Line of credit, against mostly is equity. Home renovation loans, construction loans, co-buying loans. We have a lender that provides when you are dealing with a first-time home buyers and they have only 5% down in order to avoid high ratio mortgage, CMHC, and we have now a program with the lenders. They have some restriction that they can give you up to 15%. So you can be putting down 20% and the 80% has to be financed through them. And we are working with that. So there is a funding available. Also equity sharing loans. Some people, they say, hey, if you need funds and you don't qualify for the conventional mortgage, there are equity programs. That means they appraise the value of the property and they will say, okay, how much money you need, and according to the money that you borrow, and they will be able to own this. And you don't pay interest on that. You only pay when you dispose of the property after 5-10 years. So we have an alternate lending solution. So there are type of loans available, and we're going to talk about that every day. So let's talk about the mortgage loans normally related to the real estate. And this is very important. Now we have a conventional mortgage, and we're going to define that. And we have a high ratio mortgage. We're going to talk about that. And refinancing. And there are OFSI rules. We're going to talk about that, and renewals of the mortgage. So these are very important for you to understand each one. So what is a conventional mortgage? A down payment equal to or greater than 20% of the property value. That's a conventional mortgage. When you have a 20% or more down payment, you do not need to go to CMHC for high ratio mortgage. No legal requirement to purchase a mortgage default insurance. We will provide you an offer to have insurance, but you can decline if you want to waive that. And the loan value must be equivalent to 80% of the property purchase price. So that means when you're dealing with a client who has a more than 20%, the bank will definitely want to do appraisal for that, because they have no guarantee or protection available to them from the Bank of Canada, because everybody borrow from their prime rate from Bank of Canada. So therefore, this is the bank's money, and they will go and do appraisal. Sometimes you experience that when they're closing the deal, and if there is a change and fluctuation of value in the property, appraised value come lower than the APS amount. And this is where it creates a challenge for borrowers or the buyers of a home where you're working with a realtor, that they need to arrange and fill the gap. And sometimes they can reach out to us, and we can help you to make sure that you have the funding to close it. Because if you default, lack of funds, you got to have a problem. So this scenario now is a conventional mortgage, and OFSI have waived condition for renewals. We're going to talk in the next slide. So you got to have 20% more in order to enjoy a conventional mortgage through the A lender. High ratio mortgage. This is the one we're talking about, CMHC. A high ratio mortgage is one with a down payment of less than 20% of the purchase price of the home you are buying. And this is for realtors. When they're buying this, they have to keep in mind there are buyers have if they're first-time buyers, there are programs available where they can borrow money, and that co-buying is one of the options available through our brokerage, working with our lenders, and we can help on that as well. And also, high ratio mortgage, CMHC has to charge you money, and this is co-buying is to reduce that liability, but you are co-sharing it. Instead of renting a property, if you think that you qualify for 80% of the financing and you have shortage of money, and you can borrow that and you become a co-buyer in that property. So we have that high ratio mortgage where you can use that. Refinancing. The mortgage refinancing in Canada is available to eligible homeowners and can be a strategic move to get a better interest rate. You know, interest rates fluctuate, and depending on the circumstances, right now they're high, they're going down. If you have an option and you can see the saving, realize a saving that you can refinance that because interest rate that you signed up, you may end up paying a penalty. But if you are getting a new rate, you refinance that, your package, you talk to broker, you call our office, we can guide you to make sure that the benefit of switching or refinancing in this case is benefit you. You are paying more now and you will be paying less for the duration of the period, the terms. And this is why it's very important. And when you're doing also debt consolidation, this is where you also do the refinancing, because lots of people use credit cards and they have a bunch of cards, the interest rate is 22%, or Home Depot cards or other private lending, they're very expensive. And in order to pay off them, you might do the refinancing. And this is where refinance will really fit there. So whether you are a first-time home buyer or living in your home for years, understanding mortgage refinancing is essential in your home owner journey, because you have to pay, wherever is possible, the less money to carry your house. And that's why you do refinancing. So this area is when you feel that you are paying more money, but the interest rates are going down, you need to talk to a broker who can see that, can I save you money? If the term is short, then it may not worth it, because you won't be able to save it, because there could be a penalty for your canceling your existing. So this is why it's very important to disclose information and talk to the mortgage broker, and you can call. Now, this is a renewal. This is now a mortgage renewal is a new agreement to extend or renew your mortgage terms with your mortgage holder. Right now, remember, we have a stress test 2%. Off sale, they have changed that stress test for renewals. If you have the same terms and same amount, you are getting an offer from your existing current lender, you can now go to other lender and ask for the same amount, the property, same amount, and you don't have to be qualified for stress test. They waived that. But everybody else, if you're changing the amount, changing some terms, you may end up with a 2% stress test. So this is very important when you're getting a renewal notice, whether it's a consumer or is a realtor or anyone. Make sure that you are trying to find out whether you're getting a good deal now, since the OFC has changed the rule for renewals. Now, early mortgage renewal involves renewing your mortgage with your existing lender before the terms end. This is normally the lender that you are with now will give you about 6 months before notice. They're going to renew it. And you have been working with them, and they might give you the best deal. But now you have an option to start working to see that if some other option is available. You can call Canada Express Mortgage. We can have a number at the end that we can help you out. We will, a team of professionals will join you. So don't confuse mortgage renewal with the refinancing, because renewal is that you are working with existing mortgage. Refinancing is you have some challenges and you want to refinance. They're totally two different things, and make sure you understand those things. So now what is important for us now in terms of documentation is simplest client IDs. You know, FinTrack requirement, Procedure Money Laundering and Terrorist Financing Act. We have to identify the clientele. There are software programs that we use. Most of our clients, the verification is face-to-face because we have a repeat customer. So client ID is very important. And this is why we see those and we see copies. After meeting in face-to-face, we always take the copies of those IDs because we want to make sure the person shows on the picture is the same person sitting opposite us. So client ID is very, very important. The other important thing is income verification. Though you have employment letters, when you fill out the application, mortgage application, because those are detailed documents, we need to verify that you do have the income when you are talking about financing, because this is a part of our due diligence. Know your client. This is a KYC that we have to know our client. And not only the ID, the income verification, creditworthiness, notice assessment, we also have to check out many, many things to make sure that we are dealing with the right person. There is a red flag if you have visited our realtycoffee.com or YouTube at the rate of Realty Coffee Talk. We have episode red flags, how to avoid mortgage fraud. So as a prudent mortgage professional, we have obligation to know our client. So not only we ID, we verify the down payment and source of income, tax document, notice of assessment, all these. And then we do the most important things. We take your consent to pull your credit bureau. The credit bureau will have all the data so far that you have done a history of buying and borrowing money from people. They will show up. It's very, very important that you update credit bureaus. Subscribe to them. So every year, I subscribe to this service for 2 months, check out everything, pay the money. After that, I say, sorry, I don't need your services. You are able to update your information. It's very, very important to report your employment, your residency, to make sure nobody steals your ID, because this happens that your IDs are stolen. And the only way you know it, I use Credit Bureau and TransUnion, both of them, to make sure all information, even though Equifax is the best one because we are Canadian, but some banks use TransUnion. So these are documents, minimum I'm just mentioning to you, there's a list of things. You got a mortgage application, you got to provide your asset, your liabilities. Those, when we pull the credit bureau, it copies to our origination software. We use fully protected software that you can apply online and information. So notice of assessment is show you verification income that you have reported to CRA. And we're going to define, this is very important for you to remember. These are the minimum thing I'm discussing because of the time sensitivity. Now, why this is important? This information, when you are dealing with a mortgage broker or any profession, your information has to be accurate, current, and complete. Accurate means correct, exact, and without any mistake. Information, you talk about yourself, your personal information, your contact information, your employment history, your loan that you borrow money, mortgage, debt on your credit cards, or any student loans, any rental payment, any payment or car you bought, you show that accurately. Because when we pull the credit bureau, we put the liability and asset on the form, origination software. We use FileLogic, use Finmo, and automatically it puts in there, so you cannot hide. This is very important for people to remember. More accurate information, you are making a much life easy for us to help you and our team. And it has to be current. Current in a sentence means happening or exists at the present time. What is accurate at the time you're signing the application? Complete means you're not missing anything. Having all necessary or normal parts, components, or steps, entire information that you submit on that form has to be complete. And this is very important because it leads to, when we are reviewing this, we are processing your application, our brokerage team, they want to make sure they are working with confidently so they can bargain and negotiate with the lender a better deal for you. But if some information that is not matching or missing or not up to date, it's going to create more trouble, and also is documented, and sometimes missing or false information can harm you or a client who is trying to borrow money. So accurate, current, and complete information must be submitted to a broker in order for them to secure financing. So declaration of due diligence. So when we sign client agreements, we tell them we will perform services on your behalf, professionally follow the law, and we charge you fee if there is a fee available, or no fee because lender is going to pay to us. Credit bureau reports are copied, they are stored on the origination software, lock and key, and there is a commitment letter that we secure, which give you terms and condition of giving you the loan that we borrow, we secure for you. When you sign that, that's a document. We also, when we are a broker, we are required by law, MBLA, that we disclose to the borrower what is being paid to us, what are the terms of this loan, what is the amount, what are the monthly payment, what is the amortization period. We disclose everything. And if there is a life insurance, remember some people are doing a waiver. We do that. And we provide that life insurance form, but some people waive it. That's okay. And solicit information, because these loans are processed through the lawyer. So the directions are issued, and depending on the type of loans, we're going to talk a little bit more on next pages. And proof of closing costs. If you are securing a financing, and let's say your purchase of a house, you need to show that you have a down payment, because down payment, if you have your from saving, is another thing. If you borrowed also the down payment, that will be a debt liability. It will increase your ceiling for the borrowing money. So gift is a gift. But if you have an agreement to pay back that gift to parents or the friend or family, that is a liability. So you have to make sure. An agreement of purchase and sale, we have to have an actual agreement of purchase and sale with all the amendments to reflect, even if there is a vendor take back, you need to know, because that's a liability there. We need to have that. A verification of down payment, where the down payment is coming from. Remember, the FinTrack requires us to show if there is a cash dealing or there is any suspicion of a fraud or some potential, even may not be true, potential, even you suspect that. We have to report that to the FinTrack. So there are important that we have a verification of down payment. That means you have your own resources and you have documented through Canadian banks. And we are in Ontario, we only deal with Ontario local residents. Appraisal, very important, because when you are talking about conventional mortgage, which we talked about it, that means the bank taking the risk of giving you the money. Bank is not in a business to own the property. We have so many power of sale right now. They don't want to own the property. They want to give you the money and make some money. But in order to give them the money, they want to make sure the appraisal is equal to the agreement of purchase and sale. If it's a greater, they still will go with the actual. But if it's lower, they will give you less money. And this is why it's very important to get the appraisal. And the appraisal is done by a qualified, approved appraiser from the lender who is providing the loan for this. So verification of employment, like we said, we will verify the employment. We talk to the employer to make sure the letter that you have given us for financing is authentic and verifiable. You have an income showing there. You have a T4 or T4A that shows you that how much money you are receiving. So there's a very comprehensive process. I'm just giving you some outline so you have an idea that how we are doing it. Verification of income, where you are showing a T4A or T4, we know the income. We have a letter that shows income, and we can see that plus minus that we have verified that. These are the minimum things I'm just mentioning for the sake of that we have to do that to avoid money laundering and terrorist financing it. We have more further when somebody's buying a property and by illegal means, there are red flags. So if you have time, go to realtycoffeetalk.com or go to YouTube at the rate of Realty Coffee Talk. There is a how to avoid mortgage fraud. There is an episode that I did that a couple of years ago and more. You can watch that. It's very, very important. It will help you whether you're real estate or mortgage or you're a consumer. Sorry. So basically, this is where you can go and watch this program, and YouTube. You can check that. So I'm going to say thank you for watching. And as you know, I am a principal broker, Canada Express Mortgage, and you can call us 905-785-9926. And I'm going to stop this, and we're going to talk about if you have any questions. All right. Let's. If you have any questions, please feel free to call. Ijaz, you can open your. You have any questions?
Good evening, sir. How are you?
Fine, Musa. Mr. Musa, how are you?
God is very kind, sir. God is very kind. Sir, down to the road, what's the expectations with regards to reduction of prime rate?
I think there are predictions that we're expecting a reduction of 0.5% on 11 December, because I predicted that 0.5% before this came in 23rd October. So we're expecting one on 11 December, 0.5%. So interest rate will go down.
So what will be the impact on the real estate market then?
Well, as you know, for the disclosure, I'm a broker of record for City Pro Realty Inc. and Musa is a broker of record for Public Realty. Yes, those people who are able to purchase homes, I would say up to $1.2 million, there will be multiple offers. I predict that is going to happen either in November, December, or January, because affordability is going to get a little bit better. Still, at this moment, the people who are renewing the mortgage, they have a challenge because the interest rates, no matter what they say, they're going to be paying double than what they are paying now.
Okay. What's your recommendation with regards to getting when a client will be getting financing? What's your recommendation to whether they opt for a fixed rate mortgage or a variable rate mortgage?
I would recommend that you go for at least two years variable, because things will settle down toward end of 25. So if you're buying now and 25, so at least, because interest, you have to look at the interest rate, 2 years, 1 year, and 3 years. Which one are the better one? And when you is specific to someone, we can ask Maxim, our team. Matthew is a mortgage agent, level 1. And I think Maxim, who is a broker, is gone. So I recommend that you can take a 2 years for now, variable, and wait until it goes down. But do not expect going too low as compared to what we had in the past.
Okay.
So my recommendation is you are expecting in 25 next year, your 5-year fixed rate will be close to 3.75 to 4 years. It's going to go up, but it's generating a lot of competition now with the banks. And you'll be surprised that instead of reducing the interest rate, they have maintained the 5-year fix. Variable, they have shown some flexibility. But they will definitely hungry for the business because real estate has been hurt during this 24 particularly. Daryl,
Okay,
you have any question?
Yeah. Hi, Mr. Qureshi. I have one question.
Yes.
I have recently purchased a house. I just
Yeah.
want to know how many years, after how many years you can go for refinancing.
You can do anytime. You have to look at your terms of your agreement. Did you do it for 5 years or 3 years?
5 years.
5 years. So 5 years, what was the interest rate? I'm just saying for discussion.
Around
If
five,
you're
five something. I don't exactly remember. Five something, 5.56 something like.
So what I would recommend is that depending on the amount of borrowing, please don't disclose the amount.
Okay.
If you are paying 5.9 or something high on your mortgage amount,
Yeah.
you need to call in and I can direct you, because we need to analyze it, because interest rate, you can save some money, you can do refinancing, because permanent rate may have a penalty. And if you are paying a high rate, and they will charge you a penalty, and that we have to find out how much would that be. Okay.
Okay. Right.
If that penalty, let's say, for sake purpose, is 20,000. If you have, let's say, $7 to $1 million, if it's a 20,000, we have to see if the new rate that we are proposing you or recommending you, would you save 30,000 or 25,000? You still save 5,000. So you pay one place and you can save it on the other side.
I see. Okay.
Or you can talk to your bank. Bank will not give you refinancing because they already have an existing loan with you. You have to break that. In order to break that, we have to check it out to make sure that we are able to save you money. Otherwise, we will not recommend you to break it.
Okay. So I shall wait for some time then.
Sorry?
I shall wait for some time. I think interest rates are going down, so I shall wait for some time.
Sometime, yes, because you have to see. You can see now, let's say in December, after December, you can feel, I would say in January will be the best time to do something. Because January, there is another interest rate coming down. So that may create maybe 2-3%. That's a very significant. And
so when is the next rate cut?
Sorry?
When is the next rate cut?
One is coming on December 11, and one is in January. I forgot to check the date. December 11 is, I know that there is change coming, but January is also coming. So what you can do is you can go to Bank of Canada website, subscribe to their service. Bank of Canada has a service where they notify you when they're making changes to the interest rate.
Okay, right. Thank you. Thank you, Mr. Qureshi.
And you can also reach out to us, and we can also subscribe you to our program where we can send you rates available through Canada Express Mortgage. Because I'm a principal broker of Canada Express Mortgage, and also I'm a broker of record City Pro Realty Inc. We do residential and commercial, both. And we're also licensed. I'm a licensed builder also. We build custom homes. If you have a land development, I do, zoning, site plan approval, building permits, everything. So we are able to provide this. That's why I decided to start this program. So every 2 weeks, we're going to do this, and we give you rates, predictions, and things like that. And that will help you to make decision when you're dealing with your client, residential or commercial. We also work with BDC. If you have a loan you need for commercial, our team can help you on that.
Okay, thank you. Thank you.
Okay, Matthew, do you have any question?
Oh, I'm good. I'm just listening in. Thank you.
Okay. Wonderful. Matthew is a professional engineer, and he also worked with us as a mortgage agent. And brother Ijaz, you have anything?
No, thank you. Thank you, Mr. Qureshi. Thank you very much.
Was it any useful to you? Any information I shared?
Yes, it is great to have this kind of information.
Yeah. So I'm going to make it short. When we are doing this, first of all, you are doing a conventional mortgage or you are doing a high ratio mortgage. These are two definitions. Under this, we have alternate lending. You have a reverse mortgage, equity financing, co-buying, construction loan. There's a commercial side. Then we're talking about the business loan, building loans. They look for collateral. They look for ability of the borrower to make payment. This is why I simplified it, a simpler way to show you instead of getting complicated. So when we have one-to-one meeting, we discuss very detailed about each segment we were dealing with a client. So if you have a requirement, I will provide you contact information. You can talk to our broker who will explain you everything. Contact me and we can help you out and explain anything. Okay, so Daryl, you have any questions?
Yeah, I do. First of all, thank you for this invitation. It just popped up on my cell phone here through the Everest Place. So I wanted to know how you were able to contact with me, a little bit more about your business and where you all operate or license, or because I'm here in Orlando, Florida, but your invite came to me through the Everest Place group chat.
Okay, I am a CIPS. I have a global network, Global Real Estate Professional Network. I'm a CIPS and I'm also NAR CIPS instructor. I teach CIPS.
Okay.
And when I went to Florida in 2022, Orlando, for my CIPS convention, I was doing more, it's called Global Real Estate Professional Network, CIPS. I have a monthly program. You are a CIPS, you should be a member of that. So
I am already. I'm with our Global Council here in Aura. I do global commercial and residential. I just come back from Brazil with our Global Council. I'm going to be working through Dubai. I have agreements around. So I don't want to take up a lot of your time, but I think it would be great if you and I connect offline to see about synergies of business, because as I said, I wanted to just see what this Zoom was about. I appreciate the invitation, but it would be great to talk a little bit more, because I have agreements with, as I say, France, Dubai, was just in Brazil, work with Portugal, Cyprus, Greece. So I'm a member of Aura here. I work Global Council, Commercial Council. So I think there's a lot that maybe you and I could talk about.
I think you should join every month I have a global connectivity conference on real estate for CIPS. I have done 44 global connectivity conferences. If you go to my YouTube channel, please subscribe. And when I created my Global Real Estate Professional Network, this group that they created after me, because Everest, Florida, my friend, he's a CIPS partner who created that. That's his brokerage. He created that.
So are you connected with Peter or Khalid?
Khalid.
Khalid is my broker.
Okay, so that's why we are friends.
Great. Yeah. Now, where are you actually located?
I'm in Toronto.
Okay. I will send you my contact information back to there and we'll connect offline, but I really appreciate the invite and let's see how we can continue to dialogue.
Absolutely. So there is a call My Global Partner on WhatsApp group that you can join, but you can send me directly your phone number. WhatsApp I have created. I am the only person who has a global connectivity conference 44 months consecutively, every month. Nor Korea, none of them have done that. So I've been educating.
What is the name you have?
What's that? It's a global, I think you are in a global real estate profession. It's called, you are in there, right? Global Real Estate Professional Network, right? And also WhatsApp is My Global CIPS Partners. That's a WhatsApp group.
My Global
CIPS Partners. So when people are refer to us.
All right.
Okay,
we will connect. All right. Thanks so much.